All right, David, we're here now. I would love for you to get started and briefly introduce yourself to the audience.
And about myself, I want to first say that I work at Samsung, but everything I say here is my own personal views. I don't speak for Samsung. It has nothing to do with my day-to-day. As mentioned before, I've been around since probably, I'm almost embarrassed to say, since 2011. Alex, I don't know how old you were, but
No comment.
exactly. And so, just a huge fan of crypto. I've been around. I've seen cycles. I've spoken at multiple Korea blockchain weeks, and just here, I know Alex's boss, the CEO Brian, for over 10 years. I can say that I was an early investor in Coinbase. This is the best team that I've seen in crypto in my 15 years, other than Coinbase. And some of the problems that they're working on truly move the industry forward. So anytime they ask, I'm gonna answer.
Thanks for the kind words, David. All right, let's dive right into soaking David's wisdom. As you mentioned, you've been in this industry, you've been writing about it, you've been speaking about it in various places around the world. In your past experience, maybe given all the institutional and geopolitical moments, what do you think something that most people in this room misunderstand about where crypto truly is right now?
I think the biggest misunderstanding is we're right on track. We are right where, if you had told me in 2015 that this is what the world would look like, that there would be regulatory attention and some regulatory clarity, that there was institutional interest, that Bitcoin is trading at, I don't know what it is today, 70,000, I wouldn't believe them. And I think it's very easy to get caught up in these narratives of 200-day moving average, so forth, so on. But if you zoom out, the fundamental premise of all of this is digital scarcity. Is that what the Bitcoin, the white paper, really introduced was this idea that you could introduce scarcity using software. And that was, like, up until then, it was a software is free. I worked at Google, zero marginal costs. Every single copy of software is zero. It costs zero. So it's a high margin business. What blockchain did, what the white paper did, was it introduced something that flipped everything on its head. And the reality is, I think the misunderstood piece, the underrated fact that is indisputably true, is that it hasn't been hacked. That digital scarcity still exists. There are still a lot of questions, but I think if you look at how far it's come and you understand the math and the technology behind real blockchains, it gets stronger from a security standpoint with more usage. And so I think that simple idea is so overlooked in a climate of Bitcoin's down. Bitcoin's down from 100,000. But if you zoomed out, like in 2018, price of Bitcoin was around 10,000. So we're 7x. That's a venture capital investment, right? And so every time I came here since 2011, I would come in up markets and down markets. And even in down markets, I would show them the price where it is today, and then I show them the price 3 years ago. And I would say, that's 3 to 5x. Like, you're comparing it against last year. You're not comparing it against 3 or 4 years ago. So the key idea for me is we are right where we should be, if not farther ahead. Certainly there are challenges that Eric Trump spoke about, that everybody has spoken about, that I can speak about later. But if you look at the facts, there's never been a reason to be more optimistic.
I think that gives great context for my next question, which is, in your writing, I find it interesting that you frame Bitcoin not just as an asset, but as a civilizational force. How do you see Bitcoin and crypto more broadly interacting with nation states, capital controls, and geopolitical power over the next decade?
Yeah, I have to give you my honest answer. I don't know. Like, I am not a macroeconomist. I didn't take macroeconomics in college.
Which college did you go again?
I went to Johns Hopkins. I had Then I went to engineering school, then law school, but never took a macroeconomics class. So not that that would make me an expert, but this idea, if you just read any history of money, the idea of gold or any peg that creates scarcity in a currency is one of the most powerful concepts throughout all of commerce. And what I like to think is, when I think of crypto, everybody compares crypto to the internet. And I don't think that's the right analogy. I think the right analogy is media. Because in the internet was a problem of technology development and adoption. You hear this idea, Eric Trump talked about it, permissionless innovation. You didn't need anybody's permission to build Google. You didn't need anybody's permission to build Facebook, right? But in this world, in media, it's more of a coordinated revolution. You need a media company license to build YouTube. You need a music label's permission to build Spotify or Napster. And similarly, I mean, I don't know how many people here know what Napster is. I would say that Napster was probably the most important product to launch in the history of media in the last 50 years, because what it did was it changed everybody's expectations around media. Before Napster, you just buy a compact disc, you may not remember, and you pop it in, it's a physical thing, and you have to buy the whole album. And what Napster did was you could download any song, and iTunes tried to make some headway, but it was limited because they had to go to the music labels. And here we are, nearly 15 years later, again, getting back to timing, after Napster, Spotify launched. Same product, exact same product, 2006. But their innovation, as the saying goes in science sometimes progress happens one funeral at a time. And similarly in media, progress happens with one contract expiring after time. And I think in crypto, to the question you originally answered with this idea, you look at one, not even a trend, the historical fact of there being something that's scarce as an anchor of currency, and frankly, just a new generation of internet users. I'm optimistic there will be events, there will be breakthroughs that nobody could have predicted.
So actually over 15 years, I don't know how long your career was, but through multiple venture capitals that you've been involved in so far, you've been able to invest in some of the largest companies in the world, including Airbnb, Coinbase, X, Stripe, so on and so forth. So you've watched the rise and fall, the internet disrupt and decentralized media, as you mentioned, commerce and social connection, and finance has held out the longest, right? And if you look at a lot of this institutional adoption now of things like, I spoke about tokenization of every asset. In terms of this kind of crypto adoption, where is this adoption rate and the speed? Where does that stand in terms of your expectation? Is it moving faster or slower in the ways that surprise you, or compared to other movements that you've covered so far?
I think the conventional wisdom is it's moving slower, and I'll take the opposite of that. I think it's actually moving faster. And I think related to what I spoke about before, the coordination costs, part of the, let's look at what's happening with self-driving in China. Self-driving in China, they're far ahead of the US because there is a coordinated effort between the political leadership and the industry. We have to experiment. We have to put it out there. And there are all sorts of studies in the US that say, actually, automated driving is safer than human drivers. And the data is pretty clear. But for many reasons, regulatory capture, there's no adoption. That's a coordination problem, right? And with finance, you're talking about money. You're talking about capital. And if self-driving is hard, how is a new financial rails, how long is that gonna take? You mentioned Stripe. I was one of the earliest, we were an early investor in Stripe. Met Patrick and John when they were 19. They talked about what they wanted to do, and they're just getting started. right? And so I would say you should have expected this 20-year run of sitting next to the financial rails, because another data point is, you know, I'm sure everybody here has bought on Amazon, Coupang, what have you, Walmart.com, and you think that's the only way to shop. Well, even today, after the dot-com boom, so it's about 25 years, online commerce is about 20% of retail. So it's not, it's huge, but it's not 50%. Similarly, where are we in crypto, right? Or Bitcoin as a store of value? 1%? It doesn't have to be 100%. It just has to be 10% at the terminal value, or 5%. And just think of that, where we are right now related to that.
So on that note, I'm curious how much of enterprises and big corporations, I mean, you're with Samsung now and you interact with some of the largest conglomerates and companies around the world. How are they viewing crypto as a potential mechanism to really, again, to your point, invent the way that finance has been developing? As an example, I think Tether is such a phenomenal example of something that just started from completely bottom up and now became obviously the largest stablecoin issuer around the world. Something that I'm personally interested in thinking about in the future is Tether and the likes of Circle, so basically non-Web 2 enterprise or conglomerate, will they sustain the current dominance in the stablecoin issuance and the market share? Will conglomerates like the Walmarts of the world, or Samsungs and Apples of the world, with such huge amount of user data and trust, would they be looking at crypto and be like, this is a no-brainer? We're going to completely replace how we do finance by issuing our own stablecoin. How do you think about that?
Yeah, I mean, I'm not going to comment on sort of what Samsung is doing, and I don't know what other companies are doing. But what I can say is that large leading companies of any sort of serious scale will generally be the last adopter. And it makes complete sense. You have your advantage if you are a large company is your scale and distribution. You want to take advantage of that. And your margin of error is much lower in launching a bad product than working at a startup where you don't have the scale and distribution and you need to punch through the noise with a disruptive product. In this four walls, Tether is a giant. You step outside into any boardroom and they don't know what Tether is, right? So one of the things, I've worked at Google, I've worked at Samsung, every large company, and they get a lot of criticism from startups. You're not moving fast enough, you're not adopting it fast enough. And one of the things that you internalize when you have distribution is that you want to use that advantage carefully. And so I think most companies, if I were to predict, just as an outsider, knowing nothing about, every large company, you're going to want to make sure that the water is warm before I go swimming. I don't want to be the one testing whether the water is warm enough.
Interesting analogy. We're almost out of time here. Just a couple more here. So you've written about financials and technology booms for decades. When you look at crypto and internet native finance today, what patterns from maybe past books or cycles feel most familiar to what we're seeing now? So you've mentioned media as an exemplary industry. Are there specific cycles that are analogous to how crypto has been evolving in the past decade?
It's so hard to say because, again, the unique part about crypto is the coordination involved, and that means getting the right approvals and buy-in from institutions where there's no rational answer. It's very similar to the healthcare problem in the US, right? Healthcare is 18% of US GDP. No startup really at scale has made a difference, and it's because of the coordination costs. But I think if you look at crypto, particularly this idea of digital scarcity, one idea that I've looked at, I worked at Google, we invested in Twitter, we invested in Airbnb, companies that you just didn't think would, Snapchat, they all have similar properties. The first property is they're very polarizing. The average person, if you looked at it, they would say, it's good, it's bad. And they would have a strong opinion of it because they understand it. The second is a minority thinks, people think it's used for scammy purposes. Internet, pornography and gambling. Facebook, meeting other people. Snapchat, meeting other people. Crypto, scammy money. And the reality is, what I've learned is if you look at all of these companies, yeah, they're bad actors, but that's like 5 to 10% of the usage. So you have that. The third is people ask, there's no business here. There's no business. When we were at Google, people are like, what's the business model? There's no business model. At Facebook, what's the business model? There's no business model, right? Crypto, there's no usage, right? What's the business model? And the answer is, if I knew what the business model was, big companies would be doing it, right? The whole point is that there's no business model. And finally, funny enough, every phenomenon that I've been around, there's always legal issues. It could be major lawsuits among founders. You're only suing another founder if you are talking about billions. If you're talking about $1 million here and there, you're like, let's settle, right? If you're talking billions, you're suing, right? Or there's a regulatory issue, okay? Every single company I mentioned falls into that bucket, or every single technology. Now zoom out. How does crypto check those boxes? It checks every single box. And so, the one threat you look at is like quantum computing. I don't understand it, but of all my friends, they say it's an issue, but there are entrenched interests enough to combat that issue. And it hasn't been hacked in over 17 years, which means the network has actually gotten stronger from a security standpoint. And so I'll just end it by saying it still needs, even though it's a problem of coordination more than technology, it still needs technology breakthroughs. And that's where a company like LayerZero comes in. I think the idea, Brian, in the video, he talked about these 3 issues, which are really the trilemma problem. The thing has to work at scale, it has to be fast, it has to be secure, and it has to be decentralized. Nobody's done that. That's the critique against Ethereum. Are there companies that can contribute to that? LayerZero is through providing interoperability. And so I think there will be more companies and technologies that need to emerge to make this a reality, but the underlying initial assumption of crypto is stronger than ever.
Thank you. And just lastly, now that we're wrapping our time here, you probably meet with entrepreneurs every single day, and if you were to give advice to any of the builders that are out here or watching this, if you were to give any advice for founders and ecosystem builders today, especially in the Web3 and crypto scene, around building infrastructure, or it could be applications, what should they focus on over the next 5 years, and what should they ignore completely?
This is one of my favorite questions, so thank you for asking it. Crypto is so fascinating and so hard for the founder because if you have been involved in a startup, it is so volatile. If early Airbnb was a publicly traded stock, it would be 10 times more volatile than Bitcoin for the ups and downs. If the public knew everything that was happening at early Airbnb, it wouldn't survive, right? And there's a fascinating element to that where it is liquid, right? And the phenomenon that I observed is that there are a lot of founders who can think about the price more than they think about the product. And you ask any entrepreneur, they worry once the company goes public, there's a price to look at. That's the hard part with crypto, is that from day zero, there's a price to look at. And we're all humans. I don't care what your IQ is. I don't care how mentally tough you are. You're going to be influenced by the price. And so the way I zoom out for any founder in crypto, build for yourself. Build what you love. Build something that you would do it regardless of the price. Because I've seen so many founders make a lot of money at the age of 25 to 35, and now it's not working, but they have enough money where they really don't have to work, and they just expect a quick hit. And as Charlie Munger said, you know, making money quickly builds, or making money slowly builds character, making money quickly builds ego. And it's so hard to avoid the ego trap in crypto. And the only way you can do that as a founder, in my view, is to do what Brian and the team have been doing. It's what Brian and Fred did at Coinbase. And there's survivorship bias. There are a lot of companies that did that and didn't work out. But that's your best chance of success. Build for yourself. That's your only advantage over larger companies.
All right, I think that's a wrap. Please give a warm round of applause for David's wisdom. Thank you very much for everyone.